Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about a few of the major earnings calls that are going to be announced this week. I also want to talk to you guys about why I think this week is going to be another bloody one following last week, which was the worst week for the equity markets in quite a long time. But hey, also want to talk to you guys about how you can protect your portfolio against that downside and maybe even make some money in the case that the stock markets do continue to fall. All right, so let's get into it, you guys. As always, we'll quickly go over a few of the tabs I want to share with you, and then we'll dive in. In front of us is a CNBC Pro article titled Earnings Playbook, a complete guide to this week's report, including the first of tech. Read over a few intro paragraphs here, and then we'll scroll down here, go over Monday, Tuesday, Wednesday, Thursday, the whole week, and just go over which large companies are announcing earnings on which days, okay? And as we go over that, I'll just give you guys my 2 cents on a few of those earnings calls. And we will use this to segue into my fundamental bear argument for the markets, okay? This is going to help that, okay? So this is Netflix. I'm sure you guys are all aware of this at this point in time. Netflix shares actually absolutely getting demolished. So Netflix shares, we can actually go up here. We can read through this and we'll scroll down a little bit. Netflix shares fall 20% on slowing subscriber growth. Can read over some key points here. And again, this is just a precursor to what I believe a lot of these earnings calls will hold. Okay, so that's a little spoiler right there. After we cover these, after we kind of base the fundamentals of why I'm bearish going into this trading week, we will then hop into the charts. I'll talk to you guys about some of the price action that I see potentially going down in the S&P 500 or the SPY, the Nasdaq, the triple Qs. We'll take a look at the DXY as well. The US dollar index just shows the strength of the dollar. Dollar strong, markets weak, okay? When the dollar is strong, everything that trades against the dollar is going to lose strength, and that's what we're seeing in this environment of raising rates, okay? Not going to cover BTC today. At this moment, BTC bouncing, but I'm still bearish. I'll make a video on that tomorrow. I still think it's going to 30K. That's also a spoiler as well, okay? So before we do get into that, you guys, please give the video a like. Really means a lot. Let me know in the comments down below how you're feeling going into this trading week. As always, if you got slaughtered last week, don't feel too bad. A lot of investors, a lot of traders out there got smoked. Thankfully, I hope a lot of the Waves fam didn't. I hope most of you didn't. I hope most of you hedged up like we were talking about over the course of the week. But hey, if you need a little digital hug, go in the comments down below. Someone will probably give it to you. I'll do my best to do so. And subscribe to the channel. If you're new around here, for some reason you're not subscribed, what are you doing? Help me get to 50K. That would really mean a lot. And yeah, let's read through this bad boy, okay? This is actually the intro to Friday's newsletter, but this pretty much everything I say in here still holds true going into the new trading week. I'll just adjust a few things, all right? So, happy Sunday, team. It's been a rough week for the markets, but it's important for all of you to keep your heads up. It's easier said than done, but never allow the markets to dictate your baseline happiness. You won't last long if you do. This wasn't just a rough week. It was a notably rough week. The S&P 500 was on track for its biggest one-month drop since 2020 and worst January since 2009. January effect was hoping. Again, you guys, I'm an optimist, but when reality sets in, you adapt or you get slapped. That's the reality of the game. If you're not adapting, then you don't deserve to make money, and that's the reality of, again, if this was easy, which it has been, which a lot of people are going to realize that it's not so easy anymore, that's when you're a loser, because there's always a winner and loser on both sides of the trade, all right? That's just the reality of it. I think the price action we've been seeing within the crypto market and hyper-growth sectors are proven to be a good precursor of what's to come for the equity indices. And I think this week, could be even bloodier than last week. That said, bloody waters attract the sharks. I trust all of you have the ability to be sharks when necessary. There's opportunities in every market environment. You just have to know how to attack them, okay? And right off the bat, I will say, just to show you guys up front, if you guys don't stick around to the end, the ways you can protect your portfolio are going to be by picking up direct hedges to the equity indices. Again, the S&P 500, the Nasdaq, there are certain ETFs in the market that are short ETFs or volatility ETFs like VIXY, SQQ, SPXU, UVXY. These are things that even if you don't trade options, you don't have to short things, you don't have to buy puts. You can just buy these shares, and when the markets go down, these go up. Okay, so that's just a little hint. If you guys think the markets are going to go down further, then I would advise looking in to potentially picking up some of those to, again, keep your portfolio safe, but also potentially make some money if you guys are feeling offensive in this very risk-off environment. Or if you guys are feeling a little risky, I should say, in a risk-off environment. Okay, so let's read over this guy again. We'll go over a few paragraphs right here, and then dive into each day of the week and go over the announcements that are occurring. The first tech companies of the season report earnings this week, marking a beginning of a busy couple weeks ahead. This broke up. Stock futures are flat. Breaking news. Worst week since March 2020. Damn. Microsoft, Tesla, and Apple will release quarterly results alongside a handful of other tech firms. McDonald's and Boeing will also offer updates amid a cocktail of economic headwinds. Staff shortages, rising costs, and COVID resurgences continue to dog companies headed into the new year. CNBC runs through which companies to watch this week. Just keep an eye on these. Okay, again, huge earnings. Monday, we got IBM. So Monday, as far as earnings are concerned, pretty chill. Tuesday, we got Microsoft. They just made that Activision acquisition. It'll be interesting to see how they address that in their upcoming earnings call, how that affects bottom line revenue, how they're forecasting that acquisition, how they rationalize it a little more. But also, Microsoft is a very consumer-facing company, right? They do have Xbox, so it'll be interesting to see. I mean, obviously, tablets, etc., Xbox was just the first thing that came to mind. Big Xbox guy, too. But anyway, Microsoft, again, very consumer-facing, one of the largest tech companies in the entire world. So this will be a very good gauge as to how just the overall landscape is doing in terms of consumer-facing tech, okay? This is like, again, B2C. Okay, business to consumer, not B2B. Microsoft probably does B2B too, but B2C, business to consumer. It'll be interesting to see how Microsoft does. And again, based on Netflix's earnings, they're very different companies, obviously different companies, but I do think that this is just going to be a precursor as to how a lot of individuals view these earnings. Even if revenue is looking good, I do think outlooks are going to disappoint a lot. That's what we saw with, again, Netflix, a lot of other companies that have been announcing too, okay? So Wednesday, we got Boeing. Boeing might be doing good. I mean, there's still demand for travel and whatnot. But Boeing, in my mind, is probably going to be a solid report. Intel, huge chip maker, of course. Be interesting to see how they do as well, if supply chains are picking up at all. But Intel chip maker, I don't know, chips have just been doing so well that in a risk-off environment, in an environment where everything is pulling back, chip makers, because they've been doing so well, like AMD, Intel, MCHP, etc., will probably fall in the wake of just the greater Nasdaq and greater equity markets falling. Tesla is going to be a good one. You guys know that I think Tesla is extremely overvalued. I've said it for a long time. I still think it's overvalued. I know Tesla, not just a car company, they are an energy, an AI, a tech company, which they are. But again, just from a realistic perspective, in an environment where the dollar is in higher demand and people, again, have just been in such a manic frenzy over, you look at Tesla's chart, that's not an organic chart. That's not how any company grows in the best case scenario, okay? Tesla would have to pretty much develop on Mars to actually execute on the market cap that they saw at their all-time highs, okay? Or actually to validate the market cap that they saw at all-time highs. So, Tesla, not doubting it's a great company, but again, you see Ford, GM, every car company is getting into EVs now. That's obviously going to eat into their market share. And Tesla, in my opinion, is still just objectively overvalued, okay? So Tesla will be interesting to see. I too think Tesla, just again, as the poster child for a lot of the mania that's been occurring over the past couple of years, will continue to fall, probably more than most. Thursday, we got Mickey D's. There's probably going to be some with McDonald's. I mean, I don't even know why I'm covering these, but just giving you guys my 2 cents once again. McDonald's reports on Thursday. I mean, maybe they have work shortages. People call it in sick like everywhere else, but that's all I can think. That also, McDonald's is about as consumer-facing as it gets, so it'll be interesting to see that just in terms of general. Are people going out and buying things, even if those things are really cheap? So McDonald's is probably fine. I mean, it's freaking McDonald's. Robinhood, poor hood stock, man, has just gotten absolutely clobbered since its IPO. If you look at this, Robinhood is just, this is the definition of a bleeding stock. So Robinhood, shoot, I mean, I feel like it can't get much worse, but if they disappoint on earnings for some reason, if they still don't have a clear trajectory towards profitability, if the rest of the market's falling, Robinhood, unfortunately, will probably see single digits, okay? And then The big one, Thursday, Apple set to report earnings 4:30 p.m., followed by a call with executives at 5 p.m. This is probably going to be the biggest tell of whether people who have been getting a whole bunch of money lately, I feel so in my mind, I'm going to talk about this in a Decentraland video I record after this, like a metaverse video I record right after this. But you guys, there's been so much money flowing around in the markets. And again, the helicopter money that was given to everybody by the feds. There was a lot of buying when that money was coming out. Again, there's a lot of reasons that the dollar is gaining value right now. Okay, not going to get into any of them. But again, as the dollar appreciates, everything that trades against the dollar, not just financial instruments, but the new iPhone, the new MacBook that you're going to buy, that becomes more valuable, or that becomes more valuable when the dollar goes up. When the thing you purchase those MacBooks with goes up in value, therefore those items gain value as well. Okay, so I do think Apple is not going to impress on their earnings call. That's just my hunch. I don't know how their supply chain stuff is going and whatnot, but just boots on the ground. I feel like consumer appetite is at the lowest level it's been in a pretty long time, since the beginning of the pandemic, and I do think all of these companies are going to ultimately disappoint, maybe do all right on revenue, but I don't think their forward-looking statements are going to be bullish, okay? Unless Apple straight up comes out with their VR glasses, and that's going to be super exciting. Maybe for VIXY as well. Chevron, are people driving? Probably. So I have no input on Chevron. But again, Netflix reported fourth quarter earnings after the bell Thursday. Streamer beat on profit and was in line with expectations on revenue. So see, met those expectations. But shares plunged in after-hours trading on slowing subscriber growth. 20%, which is insane. The company said for the first quarter of 2022, it expects to add 2.5 million subscribers compared to the 4 million it added in Q1 of 2021. So those year-over-year metrics are not looking very hot. But again, revenue was good. Revenue and profit were just fine. Those were in line with the expectations, right? But again, the forward-looking statements, the expectations are what the markets trade on. The market is ultimately a futures market. You're trading on future prospects of these companies, right? And if the entirety of the economy is slowing, if rates are raising, which by its nature, rates depreciate the value of these massive companies, it just makes sense that this is time. It's the time for the correction, okay? So, talk about some downside price targets. Short term, more medium term. I would say by the end of this week, I'm expecting the SPY to come down at least another 4.5% to test this previous high set over here in April of 2021. In all honesty, though, I think it's going to come down lower. We'll cross those bridges when we come to them. But my price target for the S&P by the end of this week is going to be about $420 to retest once again the high we saw just under a year ago. But again, in this macroeconomic environment, I think it will fall. I'm feeling pretty damn positive it's going to fall lower than that. But again, check out the newsletter portfolio if you want to know exactly how I'm going to be trading. I'm not making a Sunday stock watch today. This is going to be kind of the version of the Sunday stock watch, just because I'm going to be gone for a few days next week. But hey, if you want one of these bad boys, want one of my email newsletters in your inbox, scroll down more. I get into the trades that I made last week, and I go over, it's just a complete breakdown of my entire portfolio. So if you guys want my daily newsletters, if you guys want a complete breakdown of my entire portfolio, that's the first link in the description box down below. $15 a month, $40 for every 3 months. Go check that out. And again, appreciate it if you do. If not, though, no worries. Appreciate you watching now. Short term, though, super short term, like maybe Monday, Tuesday. Hey, I do think the SPY, just because it's been multiple days of just this thing is a freaking falling knife. This is an asteroid falling to Earth. I do think a bounce might be in order. I would say it makes sense to bounce around here. This acted as a ceiling before the S&P's big rip up here, multi-week rip up. Here you saw in October of 2021. So I do think that this will serve as somewhat of like a saving grace, maybe as a little bull trap, just because people are going to be like, oh, on the long-term chart, it's setting a higher low. Because technically on this overall uptrend, you could say if we base out right here, go sideways, that would reinvigorate some hope for a higher low on the overall uptrend. But again, you guys, in this macroeconomic environment, rates are raising. There's fear in the air. People are losing money that they can no longer afford to lose, and I think it's really likely that we see more downside in this. And again, when we break this level right here, once we break below about 425, 430, that completely erases the potential for that higher low in the overall uptrend and overall break a trend. We already broke despite the long-term ascending channel, which made me initially bearish. That's when I picked up a whole bunch of puts, well-timed, or not puts, but again, hedges to the S&P. So stoked about that. Again, on Thursday, Friday, while a lot of the market was bleeding out, I personally was cashing in. Again, that's the game of trading, you guys. I don't like being a bear, but again, you adapt or you get slapped. Do my best to make money in every environment. That's what being a trader is, okay? Even if it goes against my morals, against what I look forward to in the future. And again, like a lot of the companies I really love and do still believe in long term, that's the game. And again, there's winners and losers on both sides of the trade. Just don't be a loser, all right? So the S&P, again, I do think will come down by the end of this week to at least 420, but I do think it bounces in order around 435. Talk the triple Qs, and again, just VIX. VIX goes up when the S&P 500 goes down, and there are ETFs that trade against the VIX. So I just want to let you guys know that. Again, not telling you to buy them, just want you guys to know you can do with that information what you will. The Nasdaq seems like a much easier read to me. I think the Nasdaq is going to come down to at least, I mean, I put this orange line right here, but you could put it right here as well on these previous highs right here. So the Nasdaq over the next few days, I think will come down to at least right here. From current levels, that is going to equate to just under a 3% drop. But ultimately, I wouldn't be surprised to see the Nasdaq. Like, if you just look at this chart, guys, this is due for a correction no matter how good tech is doing. Again, tech is not going anywhere. Tech is evolving at an exponential pace. That's the nature of technology. But the markets have evolved at even more of an exponential pace, okay? And again, I think it's very likely that from here the Nasdaq falls, if I'm being honest, to retest this previous high over here set in September of 2020 after the Nasdaq's absolutely insane rally off its lows. You can see here, even before any news of the pandemic, Nasdaq all-time highs, February 21st of 2020. Even after that, the Nasdaq went from the high of 240 to later that year over $300. So pretty staggering, but in this corrective rate hiking environment, I wouldn't be surprised at all to see this initial high retested, a reversion to the mean, which would equate to just under 14% of downside from current levels. Okay, so that is that. Let's take a look at the VIXY real quick, which is looking decent. VIXY has reclaimed its prior ascending channel. We're on the daily candles right here, and VIXY, again, series of higher highs, higher lows, has reclaimed its previous and pretty strong ascending channel. I think the VIXY is on its way to yearly highs very, very soon by early February. Okay, to test obviously the top side of resistance on this ascending channel. So that's that, you guys. We'll call it there. Again, let me know in the comments down below what you were thinking, how you're feeling going into this trading week. If you guys freaking hopefully have hedged up, if you're excited to see how hedges performed, or if you're still bullish, let me know why. Okay, so I'll catch you guys downstairs in the comments. Until next time, always remember, take action, make waves. Peace.